So much uncertainty around tariffs. Joining me now is Frederic Mishkin, former Federal Reserve Board governor. He is also a CNBC contributor, and it's great to have you here, Rick. So why take it with a grain of salt? Just because it's lagging data in CPI and we don't know exactly how much is going to carry forward, or for other reasons?
Well, always, you don't want to pay too much attention to one number, but part of the big issue here is what the tariffs are going to do to prices. And we just don't know how long the lags are going to be. So think about the situation for a firm that's importing goods. They may have a lot of inventories that, in fact, were not subject to the tariffs. And in fact, it's only the stuff that's going to come to them in the future that's the problem. So they're not going to necessarily raise prices because they want to keep their customers. But on the other hand, once they have to pay that tax, that big tariff tax, then they're going to have to raise prices or they can't survive. So the numbers are quite good, and it doesn't look like the tariffs have had as big an impact on the prices yet, but they certainly might in the near future. So I would take this with a grain of salt. That the fact that there are good numbers, if in fact the tariffs were not on we didn't expect to have these tariffs going forward, that would be a very different environment where the Fed would actually see these as very good numbers and would want to act on them. But on the other hand, it's just too soon to know whether in fact inflation is going to be as tame as we would like.
You know, the Fed Chair Powell, in his recent comments, and I expect next week again, he'll reiterate that, you know, the Fed sees that risks are somewhat balanced, or at least there are risks on both sides of its mandate when it comes to inflation as well as employment. But he also says, you know, I guess depending on which looks like more vulnerable or more risky, that's what you would look to try and offset. Do you think this moves that equation at all?
I don't think it moves it a whole lot. I think there are a lot of reasons for the Fed to stick where it is. One of the big concerns that the Fed has is that they screwed up on inflation in terms of having a big inflation surge. There's a huge issue about the independence of the Fed. And in fact, we're going to have a new chairman at some point in the near future, basically in less than a year. And we don't have any idea what kind of person that could be. Trump could put into place somebody who is, you know, just a super dove and will do whatever Trump wants, or he can put in somebody who's more trusted by the markets. We just don't know. The Fed doesn't want to go into that situation with a lack of credibility about controlling inflation, and particularly because of the mistakes they've made in the past. So I think that they don't want to ease rates quickly for that reason, unless it's absolutely necessary. If they see a tremendous weakening in the economy, which we don't see, that if anything, the inflation numbers are probably not going to look good in the near future. All of those things point to the Fed not wanting to ease, and certainly I don't think there's any reason for them to tighten right now. Monetary policy is somewhat restrictive. There's no good reason to try to piss off Trump by raising rates when it's not clear that it's necessary. So I think there are a lot of reasons for the Fed to have a lot of inertia right now and to just wait and see the data as data comes in. I think unless something really strong starts happening, I think the Fed is going to stand pat.
Yeah, and it's also obviously happening at a time when there's many unknowns about exactly where tariff policy settles. We could get a never mind, right? I mean, let's just say tariffs go away, and then we get this tax bill that the administration is saying is going to accelerate growth. And at least on paper, we might be in a very different spot.
Yeah, I mean, I think that the idea that this bill is going to accelerate growth a lot, I think is hopeful thinking.
Yeah.
But there really is tremendous uncertainty about what's going to happen in terms of tariffs. And there's also tremendous uncertainty in what's going to happen to the world economy. The administration's policies have been ones which have created tremendous uncertainty. That could really cause people to not spend, businesses to hold back on investing. And actually, it's not the U.S. that's just going to have this problem. It could be even worse for foreign countries. So in this kind of context, it's really not clear that what's going to happen. There's just a lot of uncertainty. And it's very hard for economists to figure this out because so much of this uncertainty is politics. Every day we get something new on the tariffs, and we don't know which way to go on this. So it's just a very tough forecasting environment, and it's a tough forecasting environment for the Federal Reserve.
Yeah. Obviously, it's a difficult environment for markets to attempt to price in real time as well. Professor Mishkin, thanks very much. Appreciate the time today.